Now, there's a lot of talk out there that this new 002 rule is going to cause margin calls. Everybody wants to see a margin call when it comes to stocks like AMC, GameStop, all of these meme stocks, right? You want to see Citadel get margin called. That means they're bankrupt. That means they lose and we win. Unfortunately, it's not going to be that easy if you're only focused on price. Now, in this video, we're going to go over a couple different things that you need to be focused on. We'll talk about why price isn't necessarily the best thing to focus on, and how we can really defeat the hedge funds once and for all and take all of their money. So, of course, if it sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button yet, make sure to subscribe to the channel. Join us, become a bro. We are here every single day, and we are growing our portfolios together. All right, now AMC stock, it is the talk of the century. Everybody wants to know when the margin calls are coming, when Moon, right? When Lambo, all of these different questions, asking when are we going to see these astronomical prices that everybody wants to see. Now, we know that we have to see a margin call if we want to watch the stock. If we want to watch AMC go to obscene price levels, we're going to need a margin call, right? Otherwise, we have to have buyers coming in. We have to have retail investors or institutional investors willing, and the key word there is willing, to pay these ridiculously high prices. Now, at the moment, we know that there are investors willing to pay $56, $60 per share, and we run into these levels of resistance and fall back down a little bit. So what is it going to take? Now, if you look at the numbers, if you just look at the 100 million shares that are currently being shorted, and you know the institutional investors currently own 100 million shares, it can get a little daunting. But that's exactly what hedge funds are, right? They basically hedge what they're buying. They buy and sell the same thing, hedge your positions, over leverage a little bit to one side or the other, and then make their money that way. So the focus is on Citadel, right? Everybody wants to know when Citadel will get margin called, if it's going to trigger a trickle-down effect, and everybody's going to get margin called. So Citadel currently has about $40 billion in assets under management, okay? $40 billion in equity that they manage. Now, their portfolio is over $400 billion. So yes, they are heavily leveraged. We know this. Now, what do we also know? We know that Citadel holds roughly 724,000 shares of AMC. They've got like 57,000 put options, or $57 million, worth of put options out there, and like $41 million worth of call options. And, you know, this is a little bit of speculation here, right? If you go out and say that they probably have shorted the same amount or the same ratio as calls to puts as they have shares, they might have 1 million shares that Citadel is out there shorting. Let's take it one step further. Let's say that Citadel is shorting every single one of the 100 million shares that are outstanding. How do you get to a margin call? They would have to lose or lose almost the amount in assets they have under management. They would have to lose roughly 39, I think it is right now, $billion in order to get margin called. So how do you get there? If the AMC price, if their average short is roughly $10 a share and it's currently trading at $55 a share, that means they've got $4.5 billion in losses. So you almost have to multiply that by 10. You almost have to multiply the current price of AMC. If Citadel was trading and if Citadel was shorting every single one of those 100 million shares, you'd have to get the price to like $500, $350 to $500 before you would really see threat of a margin call. And that's if they didn't make any money anywhere else, okay? That's if none of their other assets went up in value, that they could go ahead and alleviate some of that pain that AMC is giving. So hopefully you can see, hopefully this sheds a little bit of light on how hard it would be to cause a margin call strictly based on price. And price is easy for the hedge funds, guys. They can find money under the couch, right? They can find money anywhere. They can sell other assets. Their other investments are bound to go up along with AMC, or their short positions on another stock are bound to go down. You see what they can do with crypto and all the sell-offs that they cause and all of that. So yes, they can find the money. What can they not find? This is the real important part. If you guys watch any of the live streams, if you watch any of the videos, you know that I'm going to talk about volume right now. If there are no shares available for them, that is the biggest risk that we can cause. That is the biggest risk. And that is why it is so important to hold the stock. So you ask me, is it good that we're consolidating? Yes, it's good that we're consolidating. Why? It's going to alleviate some of the volatility out there. What does volatility do? Volatility brings in day traders. Day traders will absolutely kill the squeeze every day of the week. I mean, there couldn't be anything more detrimental. Sure, they might help the price, but they're in and out. They're in and out so fast that it's not going to drive the price up. Why? Because their shares become available over and over and over and over again. So stop day trading AMC. If you want to take advantage of the volatility, play with options. All right? Stop day trading AMC, and we bring that volatility down. When the volatility comes down, the stock consolidates. When the stock consolidates, day traders, it's like a bully. When they start bullying you, all of a sudden, they feed off that, and then they continue to do it. They continue to do it. Once they see that AMC is trading sideways, they'll leave. And then the volume comes down. So it's like a perfect storm when they walk out and we come in. A lot of people think that you need higher volume to have a higher price. Not the case. We absolutely want low volume during the short squeeze. We want low volume to trigger the short squeeze because we've got 3 ways that we can see it. Increased regulation. We are going that route. 002 is a very good step forward. It's recognition that these hedge funds are taking risks that the clearinghouses and the brokers and the lenders do not want to be a part of. Absolutely great. The stock price is going up. That is also good. But that's kind of like a lesser end of the focus because they can find money. If they can't find the shares, what does that do? That increases the days to cover. And it says to the lenders, well, this isn't something that you're easily going to be able to go out and get if we get close to that margin level. If we get close to needing our liquidity back, if we get close to needing that money back, you can't go out and get it. So that's a risk. That will increase the likelihood of the margin call. So it's almost like if you know that the price can't do it and you know that the holding the stock can do it, that's what we should be focused on. Now, I believe that you and I are focused on that. I truly do. And I see a lot in the live streams, and this brings us to a very good question, okay? What do you do? What do you do if the hedge funds start trading the stock back and forth? So let's briefly discuss that. If volume is the issue, couldn't the hedge funds just go out and trade it back and forth 50 times a day between each other and increase the volume? Yes. Yes, they can. But here's the good news. 1, they would have to be trading back and forth between 2 different hedge funds. You cannot trade the stock between the same beneficial owner. That's market manipulation. That is illegal. So they would have to trade it between 2 different hedge funds or 2 different institutions. And I'll tell you this right now. If Citadel, for example, is heavily over-leveraged to the downside, BlackRock, Citadel's competitors, Vanguard, you name them, they don't want to see Citadel survive. Why? Because all of the money that's invested in Citadel right now will walk its happy little self over to BlackRock or Vanguard or any other hedge fund for that matter, and then it's going to increase the value of those institutions. So these guys are sharks, man. They don't play together. They're not like the chipmunk, right? They're not friendly. They don't play together, and they want to see the other guy fail because that means billions or hundreds of billions of dollars coming into their pockets. So they're not going to be playing so nicely with Citadel. That leaves Citadel with the option to manipulate the market and trade it with themselves. That results in what's called a wash trade. Now, I know there's a lot in this video, right? It might be a lot to process. We can break it down in the live stream tomorrow. We can break it down in some other videos. Absolutely. It is a lot. But look, they cannot trade. Citadel cannot trade. It doesn't matter if it's a subsidiary of Citadel or some offshore account that they have. They cannot trade back and forth just to create volume. It's a good strategy if it would work, right? We create the volume. We don't get margin called. We can find money anywhere. We don't get margin called. Yeah, they could try and find all of these loopholes, but it's not something that they want to mess around with. And yes, I'll agree with you guys if you've done the research. The fines are not extravagant. for trading back and forth between yourself. But that was in the past, and hopefully the SEC is cracking down on this kind of stuff. Hopefully they will implement bigger fines, because at the end of the day, you and I both know that if they're risking a margin call or they're risking a slap on the wrist, they're going to take the slap on the wrist every day of the week. I would, you would, everybody would. It doesn't mean anything, but if they get margin called, they lose, game over, they're bankrupt, we win, we take all of their money, and all of those other institutions are going to take all of their future business. So please, guys, although manipulation does occur, although it is out there, these guys are not finding friends. They're not finding people who want to help them out. If they're going to try and bail themselves out, it's going to be illegal, and all eyes, when I say all eyes, are on GameStop, AMC, all of these meme stocks right now. All eyes are watching. So hopefully this sheds a little bit of light on how we can really, apply the pressure to this short squeeze, how we can really move this margin call along. And please share this video with somebody who hasn't seen it, who might be thinking about getting into AMC, or really, from there on. Because if you're looking for price, if you're looking to move the price up, we still have a ton, oh my goodness, a ton of room that we can move up. One, before we even trigger margin calls, and two, $100, $100 is going to be nothing if these margin calls come through. They really will be nothing. It's going to be a drop in the bucket, guys. The price of AMC can absolutely go through the roof if everything plays out according to plan. Now, will it play out? I don't know. Time will tell. You and I will tell. The paper hands, sorry guys, get out. It's time for the big boys who want to make money. So if you're in AMC to make some big money, let us know down in the comments below right now. If you haven't subscribed to the channel yet, make sure to click that red subscribe button and turn it into a bro, right? Once you've clicked it, you've become a bro. Thank you so much for doing that. Share the video like I said before. Use all of the links down in the description below. Webull, all of that good stuff. Sign up, deposit $100. Man, make some money in the stock market. That is why we are here. And yeah. Until the next time, I hope that each and every one of you have an awesome day.